Direction is definitely one of these critical factors that every trader needs to understand. And it's really quite simple when you think about it, because price can only do one of three things when it comes to direction. Price can either go up, an upward movement in direction, down or downward, or price can move sideways when we look at it from a chart. So really it's these three things, these three categories that we need to understand. So let me give you a visual here. Here, price is going up or upward, or a rally as we would call it. So price, again, can only move in one of three directions. This is one of them, an up or upward direction. We see these candlesticks or price continually going higher and higher and higher. You'll see some of these candles go a little bit lower, but overall, the big picture here in that highlighted green area is price is heading higher. Just the opposite is down or a downward move in price, where we can see more red candles than blue candles, or more downward movement than upward movement. So the overall direction of price movement is going down. And then the third is sideways. Price is not going higher or lower. It's really just floating along sideways. It's stuck in a range from that low area to that high area. Now, price might go a little bit above or a little bit below, like you see on this, it popped up a little bit above, but for the most part, it's just going sideways. And it's difficult when price is going sideways to break out of that sideways range that it's stuck in. Now, eventually it's going to break out one direction or the other, but while it's going sideways, that's exactly what it's doing. There's a lot of indecision going on, no major commitment from the buyers, no major commitment from the sellers either. They're just maybe waiting for new information or simply waiting for a catalyst before they commit to buying aggressively or commit to buying, or commit to selling aggressively. All right, and here you can see all three of them together, up, sideways, and then down. All right, here's another look at it. So here we can see that sideways momentum. Again, price is stuck in a range, just going sideways. And we often see it. It's a very common occurrence. And then here we see a more downward movement or downward momentum, but it's kind of slow. It's a slower downward momentum that we see compared to this downward momentum, which is much faster, much more volatile. We can see there's more aggressive selling behavior going on. So imagine the slow downward momentum. There's just some gentle, easy selling, not a whole lot of buying. But something happened, maybe one of these catalysts that we're talking about, where it produces this fast, almost a panic sell-off type of situation in that fast downward momentum. Next up, we have fast upward momentum. Well, maybe the sellers sold everything they had and there's no more sellers. So now the buyers step in because now it's at a good price, a good value. So the buyers step up. Maybe there's a very bullish catalyst going on. Whatever the reason is, now we see this fast, aggressive buying. So you see this fast upward momentum taking place now. All right, let's take a look at some other examples of price pattern behavior. Go ahead and continue on to the next lesson.